Some of the most popular reversal patterns you're using are also some of the most unreliable. You see the hammer, you get in, and then the market just chops you out. You spot the doji, you anticipate the turn, and it just keeps going. Frustrating, right? Well, what if there was a pattern that was so specific, so demanding in its structure that when it does appear, it carries a huge amount of significance? A pattern that most traders have never even heard of. The abandoned baby candlestick. The name itself is intriguing, right? It paints a picture of isolation, of being left behind. And that's exactly what this pattern is all about. It's a 3-candlestick reversal pattern that signals a potential exhaustion of the current trend and a sharp reversal. Now, to make sure you get the most out of this, here is our game plan for today. First, we're going to do a detailed breakdown of the pattern itself. What does it look like? What are the exact non-negotiable criteria that separates a true abandoned baby from a fake out? Second, we'll explore the market psychology behind each candlestick, because if you don't understand why a pattern works, you will never have a conviction to trade it properly. Third, and this is the most important part, I'll give you my step-by-step trading plan, including exactly where to enter, where to place your stop loss, and how to manage the trade. And finally, we'll look at some examples and the common pitfalls so you can avoid the mistakes I made when I first learned this. Let's start with the structure. There is a bullish and bearish version. We'll use the bullish abandoned baby for our example. It signals a reversal from a downtrend to an uptrend. It has 3 very specific candles. Candle 1, a long bearish candle within a clear downtrend. This shows the sellers are still firmly in control, nothing special here yet. Candle 2, this is the baby. It's a doji, but not just any doji. This doji must gap down from the close of the first candlestick. So there is a clear gap between the body of the first candle and the body of the doji. This doji represents indecision. The selling momentum has halted abruptly. The market opens slower, but by the close, it's fought back to where it started. The bears tried to push it down, but the bulls fought back to a standstill. Candle 3. This is the confirmation. It's a long bullish candle that gaps up from the close of the doji. So now we have a gap on either side of the doji, completely isolating it. This third candle opens higher and rallies, confirming that the bulls have decisively taken over from the indecision of the doji. The key here is absolute rule are those gaps. Without them, you just have a variation of a morning star pattern. The gaps are what makes the abandoned baby so rare and significant. So why does this pattern work? Let's think about the story it tells. In a strong downtrend, the bears are confident. The first candle reinforces that. Then, the market gaps down on a second candle. That's bearish enthusiasm. It doesn't go any lower. It closes right where it opened. That's the first warning sign for the bears. It's like they threw a huge punch and nothing happened. The bulls absorbed all that selling pressure. Then, the very next candle, the market doesn't just open flat, it gaps up. This is a massive shift. The bears who sold the gap down are now trapped. The bulls, seeing the failure to continue lower, are now peeling in with confidence. That little doji, abandoned by the trend on both sides, becomes the exact turning point. It represents a total vacuum of selling pressure followed by an explosion of buying pressure. Can you see how this tells a much clearer story of a shift in the momentum than a pattern that just slowly grinds into a reversal? Okay, theory is great, but let's get practical. Here is my exact checklist for trading a bullish abandoned baby. Step 1. Identify the precondition. We must be in a defensible downtrend. Don't try to find this in a sideways market. We need a clear trend to reverse. Step 2. Spot the 3 candles. Look for the sequence. Bearish candle, gapped down doji, and gapped up bullish candle. I cannot stress this enough. The gaps are mandatory. The doji body must be isolated. I remember the first time I thought I found one. I was so excited I entered early. Turns out the third candle did not gap up. It just opened a tiny bit higher. It was a morning star, not an abandoned baby. And it failed miserably. That loss taught me to be religious about the criteria. Step 3. The entry. My entry is on the close of the third candle. You need that confirmation that the bulls are actually going to follow through and not just leave a weak up top. By waiting for the close, you avoid fakeouts. Step 4. The stop loss. This is non-negotiable. Stop loss goes just below the low of the doji. Why? Because the doji represents the point of indecision. If the price moves back below its low, it means the bears have regained control and the reversal thesis is invalidated. Step 5. The take profit. There are a few ways to manage this. You can either aim for a prior resistance level, use a risk-to-reward ratio of at least 1 to 2, so if your stop loss is 50 pips, your target is 100 pips above your entry, or you can trail your stop loss after a significant move to lock in profits. Now for the pitfalls. First is the almost pattern. The biggest mistake is trading a pattern that almost looks like an abandoned baby but is missing a gap. It might work sometimes, but you are trading a lower probability setup, so stick to the rules. The second is ignoring the trend. Finding this pattern in the middle of consolidation is useless. It needs context. The third is placing the stop incorrectly. Do not put your stop below the third candle. That's too narrow. The key level is the doji's low. That's your line in the sand. And the fourth one is chasing the entry. If you miss the close of the third candle, do not chase it too far. The best risk to reward ratio is gone. So wait for the next setup. This pattern is rare. There is always another trade. Now I want to hear from you. What's the rarest candlestick pattern you've ever successfully traded? Was it the abandoned baby or something else? Drop a comment below and let's get a discussion going. I read every single one. And if you want to see the live application of these exact rules, this is precisely what I do in my private trading group. I provide real-time breakdowns of high probability setups with clear entry, stop loss and take profit levels. If you're ready to take the guesswork out of trading, you can check it out using the link in the description below. So until then, trade safe, manage your risk, and I'll see you in the next video.